everyone. Welcome back. Today we are learning something I'm really excited about, investing in the US stock market. Now I want to be completely honest with you. I'm learning this stuff too. I'm a beginner just like many of you and we are going on this journey together. So this isn't come from some expert. This is one beginner teaching another beginner because I felt like overwhelmed with many terms, new topics, strategies, a lot. So I thought, wait a minute, let's take back one step. Let's start from the beginning. So we are learning this together. So in this video, we're going to cover everything you need to know to make your first stock investment, I would say. Like how to buy, what they actually are, different terminologies, like which apps to use, most importantly, how to not lose your money. So let's jump right in. Alright, first thing first, what exactly is a stock? A stock is basically a piece of ownership in a company. When you buy a stock, you are not just buying some number on a screen. You are actually becoming a partial owner of that company. You become what's called a shareholder. So, what do you get when you own a stock? Well, you get the potential to make money when the stock price goes up. Some companies also pay you dividends, which are basically cash payments just for owning the stock. And technically, you also get voting rights in the company. Though let's be real, if you own 10 shares of Apple, you're not exactly influencing their decisions. But here's the risk. You can also lose money if the stock price drops. The company could even go bankrupt and your shares could become worthless. And the market can be really volatile, meaning prices jump around a lot. Here's a quick example to put this in perspective. Let's say Apple has 1 billion shares in total and you buy 100 shares. That means you own 0.00001% of Apple. You're an Apple owner. Pretty cool, huh? When you think about it in that way. So, now you might be wondering, how does this whole stock market thing actually work? Think of the stock market like a giant marketplace, kind of like a eBay or a farmer's market, but instead of buying vegetables or electronics, people are buying and selling pieces of companies. Here's how it works in 3 steps. First, companies decide to go public and list their shares. They do something called an IPO, an initial public offering, where they sell shares to the public for the first time. You might remember companies like Airbnb or Coinbase having big IPO days. Second, once those shares are out there, investors like you and me can buy and sell them through stock exchanges. The main ones in the US are the New York Stock Exchange and Nasdaq. We'll talk more about those in a minute. Third, the prices change constantly based on supply and demand. If lots of people want to buy a stock, the price goes up. If lots of people want to sell, the price goes down. And this is happening literally every second that the market is open. Speaking of which, the US stock market is only open Monday through Friday from 9:30 a.m. to 4 p.m. Eastern Time. It's closed on Wednesdays and holidays, so you can buy stocks at midnight on a Sunday. The market is closed. So now let's talk about where stocks are actually traded. There are two main stock exchanges in the US. First, we have the New York Stock Exchange. This is the big one. It's the largest stock exchange in the entire world. You've probably seen it in movies, that building with all the traders on the floor yelling and weighing papers. The New York Stock Exchange is home to a lot of established traditional companies like Coca-Cola, Disney, and Walmart. When we have Nasdaq, which is a completely electronic exchange, there's no physical trading floor. It's all done through computers. Nasdaq is known for tech companies. This is where you will find Apple, Microsoft, Amazon, Google, Tesla, basically all the big tech names. Here's the cool thing though, you don't actually need to know which exchange a stock is on. When you buy a stock through your broker, they handle all of that for you automatically. It's all behind the scenes. Now, you probably heard people say things like the market is up today or the market crashed. But what does that actually mean? The market is thousands of different stocks. So how can it be up or down? This is where indexes come in. Indexes are basically scorecards that track groups of stocks to give us a picture of how the overall market is doing. The S&P 500 is probably the most important one. It trades the 500 largest companies in the US. When people want to know how the overall market is performing, they usually look at the S&P 500. It's the best representation of the US stock market as a whole. Then there's the Dow Jones Industrial Average, or just the Dow. This one only tracks 30 major companies, but they are really big, established companies. We call them blue chip stocks. The Dow is the oldest index and it's the one you'll hear about most often on the news. Finally, there's the Nasdaq Composite, which tracks over 3,000 stocks that trade on the Nasdaq exchange. Because Nasdaq is heavy on tech stocks, this index tends to be more volatile. It goes up and down more dramatically. So, when someone says the stock market is up 2% today, they are usually talking about one of these three indexes. So, in next video, we'll learn about how to buy stocks, step-by-step guidance, and how we can select a broker as a beginner, and also about understanding stock prices and also types of stock orders and many more. Keep watching. Thank you.